Hi, this is Lara from Forex Info USA with your free US dollar index Elliott Wave analysis for the New York trading session dated the 21st of March. I've been away on the road for the last week working off a much smaller laptop, hence my not doing the US dollar index last week. My apologies if that's been an inconvenience to you. I certainly hope to be back to doing it every day from now on. Starting this analysis with a reminder of the bigger picture, and here's a chart going back to 1985. We had a 5-wave impulse at cycle degree down, followed by a 3-wave corrective movement for cycle degree A, followed by a 3-wave movement I've labelled cycle degree B, which calls for, because this is a 3-wave movement for A, that means it's a flat correction, and because B ends below the start of A, it's an expanded flat correction. That calls for a long, strong C wave that should end comfortably beyond the end of A. So we should see dollar rises for the rest of this year and into next that see the dollar, and for following years, cycle degree waves last about 5 to 7 or 8 years. So for the next few years we should see dollar rises that see the dollar well above about 122. For this primary 1 and 2 and 3, I have an upwards target for wave 3. It will equal 1.618 the length of wave 1, about 104.58, and that's a really common relationship between third and first waves. So taking you now for more short-term outlooks to the daily chart, just for this last little piece of upwards movement here. And here's our last end of this upwards movement. We had a minor or blue 1 and 2 and 3 and 4. 4 is now most likely over. We have a really confident breach to the upside of this parallel trend channel that contains this corrective movement for our 4th wave. I've got this labelled as a double combination, a flat ABC, regular flat, followed by a very strong 3-wave movement for X. X should be a corrective structure, followed by a regular zigzag ABC to finish Y. If minor or blue wave 5 has begun here at 79.51, its most likely length will be equal that of this first wave that we had back there, and its most likely upwards target therefore will be about 84.22. We're going to take a couple of weeks and a bit more probably to get up there. So taking you to have a look now at this corrective and most recent impulsive structure on an hourly chart, where this C and Y and 4 is this C and Y and 4 just down here. Here's our corrective movement that I've got in this parallel trend channel and labelled wave 4 blue, and notice the very obvious difference between this series of overlapping choppy waves compared to this very obvious trending upwards clean impulsive wave look. Wave behaviour is really important, and once wave 5 has started, this is exactly what we expect to see. I expect a shorter term upwards target could be about 81.19, and then we may have a little correction down, as this may be the end of wave 1 at the green level, and then we may have a little trend correction down for wave 2 green. I expect the upper edge of this parallel trend channel that contained wave 4 blue would provide some pretty strong resistance for any downwards movement that may come up as the second wave at the green level develops. So I've got this labelled as a 1, 2 with an expanded 3, 1, 2, 3, 4, and we've still got to finish 5. I've labelled this in this way because we can't have 1, 2, 3, 4, 5, because that would leave wave 3 as the shortest wave, and that's a violation of one of the core Elliott Wave rules. Third waves are very commonly extended, so if we see a situation like that, the correct labelling is to label it as an extension in the first instance. This labelling is tentative and may change as the structure unfolds. However, I expect this is most likely, so far it looks absolutely correct, and it may very well stay the same. Another reason why I have really strong confidence that wave 4 blue is over, if this is the last zigzag of that 4, we had an A, B, C. This is the low for A, and this is the low for C. A trend line on price shows the trend line angling down. This is a technique I picked up from Jeffrey Kennedy at Elliott Wave International. On MACD, if you can see divergence in the trend lines, then you have a strong indication that momentum is waning as you get to the end of a structure. In this case, the structure being ABC zigzag. As you get to the end of it, the trend lines diverge. That's another strong indication for the end of a C wave. It also works really well for end of fifth waves. So I expect we're going to see some pretty good dollar rises over the next couple of weeks. My target, 84.22. We'll see how accurate that one's going to be. I hope you had an awesome weekend, and I hope your trading week has started well. May all your trades be profitable.